Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries. In case you're here for the first time, WhatsApp number is on your screens. That's where you send me all your queries. Don't forget to mention your name, location and your contact details when you have sent your question as well. Remember, you can also log on to our YouTube channel on Business Today. Go on to our Daily Calls Live and use the comment section there to send me your questions too so that I can address it with our top market experts who will be joining in on the program. Today also we'll be joined by two special experts. First one will be Nilesh Jain, Head and Vice President of Technicals and Derivatives Research at Centrum Broking. He'll be joining in shortly. Also after that at 12:30 we'll be joined by Ruchit Jain, Vice President and Head of Equity Technical Research Wealth Management at Motilal Oswal Financial Services, and he'll also be joining in as well to answer your questions. Let's look at the markets first before we get on with our Q&A round. The 25,400 mark has been tested on the downside. You can see 110 points lower cut on the Nifty. We are at the day's low point. There has been choppiness throughout the course of the day that we have seen. Now most of the pockets on the markets in terms of sectors, they've all slipped into the red, barring real estate and metals. Those are the only two pockets that are holding themselves up into the green. There is a surge on India VIX too. Now it's back above the 12-odd mark, 12.06. There's a percent uptick on this one. So the volatility is rising. Remember, today is the weekly options expiry session and the volatility cannot be ruled out because of that. What's moving on the Nifty? Top movers are IndusInd Bank, Maruti Suzuki, Jio Financial Services, and we also have names like Tata Steel, Axis Bank that are up. What's down in trade? Bharti Airtel, Cipla, Tech Mahindra, Shriram Finance, and also names like Infosys, M&M, Wipro, HCL Tech. Some of the IT names ahead of earnings are seeing some cuts at this point. Let's welcome our guest. Nilesh joins in on the program with us. Hi Nilesh, warm welcome. Good to have you with us on the program. Help me understand with your fresh take on the markets, especially now we head into the second half of the trading session, which is also the expiry session. How do you expect it to pan out now?
Very good afternoon, Sakshi. Absolutely. So today, being a weekly F&O expiry for the Nifty, looks like more sort of a tepid session, and we are expecting slightly negative close for the Nifty today. Looking at the breakdown that we have seen from the levels of 25,400, we are witnessing an unwinding of the position from the put strikes. So looks slightly on a negative side. We can expect further downtick to continue from here. 25,350, 25,300 could be the range where Nifty may test those levels. So overall, it's a kind of a sluggish move today. The structure is looking slightly on a weaker side. Not expecting any major crack, but yes, some bit of a follow-up move on the lower side can be seen in the Nifty. As far as Bank Nifty is concerned, comparatively, we are witnessing a bit of outperformance, relative outperformance, I would say. But still, the structure is also looking sort of a profit taking at the higher levels. So if it breaks below 57,000, then we are likely to witness further downtick towards 56,600 to 56,500 as well. But as of now, it is important to see whether Bank Nifty manages to defend 57,000 mark on the closing basis. The chances are very high that Bank Nifty will defend those levels. This is the market where one should focus on stocks and sectors. On index front, we are likely to witness a bit of consolidation with negative bias to continue.
Okay, fair point. So that's the viewpoint on the markets then. Nilesh, we have some questions already pouring in from our viewers on our YouTube channel. So we'll start off with that and keep coming back to you for your view on the markets too. Manoj Pai Kabadia is our first viewer on YouTube. He wants to know about Siemens and he says 50 shares हैं इनके पास और इन्होंने जो खरीदारी की है Siemens पर वो 3,060 रुपए के ऊपर है. 3,067 to be precise is what he's bought it at, and he says इस कंपनी के बारे में बताइए, इसमें रुकना चाहिए या सेल कर देना चाहिए. अगले 6 महीने तक के लिए अगर नज़रिया हो तो इस शेयर पर आपका क्या व्यू रहेगा. Siemens फिलहाल 3,172 पर चल रहा है, यानी कि इनकी खरीद से ऊपर है, प्रॉफिट्स में है अभी. 6 मंथ्स तक का आउटलुक क्या होगा आपका?
बिल्कुल देखिए, नजरिया 6 मंथ्स एंड अबो का है तो मैं कहूँगा बिल्कुल यहाँ पे एक बार के लिए बने रह सकते हैं. हालांकि अगर प्योरली ट्रेडिंग के पर्सपेक्टिव से देखें तो स्ट्रक्चर थोड़ा सा वीकनेस दिखा रहा है और हो सकता है यहाँ पे और भी गिरावट इसमें देखने को मिल सकती है. स्टॉक मे टेस्ट द लेवल्स ऑफ 3,100 to 3,000 ऑन द लोअर साइड. शॉर्ट टर्म के पर्सपेक्टिव से स्ट्रक्चर वीक है. नेक्स्ट 6 to 8 मंथ्स के पर्सपेक्टिव से आई थिंक ये जब कंसोलिडेशन खत्म हो जाएगा तो एक लेग ऊपरी स्तर पर हमें देखने को मिल सकता है। उसके बाद काउंटर यहाँ से 3500 से 3700 तक के लेवल दिखा सकता है। ऑल्दो हम पिछले कुछ महीनों से लगातार इस पर्टिकुलर काउंटर में अंडर परफॉर्मिंग देख रहे हैं। इनफैक्ट ये 8-9 कंसेक्यूटिव मंथ्स ऑफ कंसोलिडेशन है, वो अभी भी थोड़ा सा टाइम वाइज करेक्शन है, वो कंटिन्यू होता हुआ नजर आ रहा है। तो सबसे पहले तो 3000 का लेवल इंपॉर्टेंट सपोर्ट है, वहां पे आप एक ट्रेलिंग स्टॉप लॉस लगाएं। लॉन्ग पोजीशन है तो बने रहें। अगर शॉर्ट टर्म के पर्सपेक्टिव से पुल बैक 3300-3400 का मिल जाता है तो वहां पे एक बार के लिए प्रॉफिट भी बुक कर सकते हैं।
Okay, got that. That's the view that's coming in. Let's take another question. This one is from one of our viewers, Ankur Modi. He says, "Hi Sakshi, hope you're doing well." I'm very well, Ankur. Thank you so much for asking. The question is on Ola Electric. He says Ola shares have fallen massively from over 150 kind of levels, and I want to know whether it is right now risky to continue to hold on or buy at this point in time, or should I actually take that risk for my portfolio and enter at the current levels? Ola Electric today also has slipped below that 40 odd mark at 39.9 odd levels. Your suggestion on Ola Electric for somebody having a 2 to 3 year horizon, should one take the benefit of lower prices? I think the stock is down by 70 odd percent from its all time high levels. So many are looking at this as an opportunity. So should they be actually looking at it, or is there still a risk that one should be aware about?
See, Sakshi, first of all, just because the stock has corrected a lot, it doesn't mean that it is giving a good opportunity. You need to see the developments in the organization, in the company. So we have seen a lot of negative development as far as Ola Electric is concerned. That's the reason probably the stock is constantly witnessing this downtrend. And looking at the overall structure, I think there is further room on the lower side that stock may fall further towards 36, 35, or maybe 30 kind of levels can be seen. But it is not advisable to take any contraband in this kind of a weak structure. So better you have better options available within the auto space where the fundamentals are good, technical structures are good. You can probably look at those stocks rather than taking any contraband in this particular counter. So as of now, it's an avoid till the time we do not see any strong reversal candle on the chart, any positive development. If at all we do not see, then it's an avoid. And you have better options available within auto space. Better look out for better options in that particular space.
Okay, got that. Jay Rami Reddy writes in, says, "Hi Sakshi, happy Guru Purnima. Happy Guru Purnima to you as well. Thank you so much for writing in. The question is that I want to invest 1 lakh rupees and I've selected one stock, and that is Hazur Multi Projects. Can you please review this stock?" Okay, Hazur Multi Projects is a stock that's now trading at around 44.9 odd levels. But if we stretch the charts of this stock, let's talk about last 5 years. This was one stock which in the year 2021 was trading at around 1 rupees, 1 rupee, 2 rupee odd. So it has been a penny stock for the longest time, and only after I would say 2022, 2023, there has been some uptick in this stock, and there has been some sharp rallies that we have actually seen on this stock. And the stock also went up to a high of 58, 59 odd level. 63 was its 52-week high, and right now it's the low has been seen at 32 odd levels. Okay, and 1000 odd crore rupee kind of a market cap. So, and a stock which is low liquidity and a very, very risky stock at that space is what we can spot it at. What about you, Nilesh? How would you look at this stock?
Absolutely, Sakshi, you have rightly pointed out. It is a highly liquid counter, only BSE listed stock. A lot
Yeah.
of upper and lower circuits we have seen in this particular stock. So it's an avoid. Do not trade in such counters where the volatility is extremely high, and there is no clear visibility on the chart that we can expect this counter to move in any particular direction. But the overall structure is indicating that we may see this consolidation to continue. There could be possibility of a pullback move towards 55 to 60 as well, but it is extremely risky trade. If you are already holding the long position, then keep a strict stop loss at 44 rupees, and if it breaks below 44, then you have to review again, because probably you may not get a chance to exit if it start hitting lower circuits. So the structure wise, there could be possibility of a pullback, but I would advise to keep a strict stop loss and trade with the strict stop loss in this kind of scripts.
Okay, got that. I hope this has answered your question. Satya writes in, says, good afternoon, Sakshi. Good afternoon to you, Satya. Som Distilleries is the question that he has on. He says, I've bought it nearly at the current market price only and I want a short term view on this. Can you please suggest me as to how I should be really looking forward to Som Distilleries from the liquor pack?
Let me just open it.
153.7 is the current level at which Som Distilleries is trading at. Last 1 month has been pretty lackluster. It went up in the middle of June onwards and then came down as well. So it's been sideways. Last 3 months, although there has been about a 23-24% uptake.
Right, Sakshi. So HDBL is the symbol for this particular counter. Looks very strong on the chart, but purely from a positional perspective, from a short-term trading perspective, the structure is looking slightly on a weaker side. We have already seen good profit taking at the high levels from the levels of 174. The stock has corrected all the way to 153 right now. There could be possibility of a follow-up on the lower side towards 145, 140 kind of levels can be seen in the short run. But if bought it purely from a long-term perspective, let's say if somebody can hold it for 8 to 12 months kind of time horizon, then one can stay put, keeping a strict stop loss below 135, and we can expect a gradual up move towards 175 to 180 once again. But for that, you need to keep a strict tailing stop loss in this particular counter.
Okay, fair point. I hope this has also helped you understand how to go about this talk. Let's look at the next one. This is Jay writing in. He says, thank you, Sakshi. It's a very useful show for us. Thank you so much, Jay, for writing in. He wants to know about Vedanta now and he wants to take a fresh entry here. Now, yesterday, what we saw was a short seller, just like Hindenburg, Viceroy Research, that came out with a report saying that Vedanta's is having some financial misappropriations. It highlighted about how it believes, Vedanta is operating like a Ponzi scheme, and all of those allegations were sharply refuted by Vedanta Group. They called this short seller, and the report that they came out with absolutely baseless with the malicious intent too. The stock intraday only recovered half of the losses that they had incurred in the intraday basis yesterday. Today it opened on a green note, but again is seeing some softness at this point. How would you look at Vedanta, Nilesh ji?
Sakshi, see, first of all, we need to wait for some more time. Let this dust settle down. Yesterday, the impact was seen on the back of a negative report, and today also we are witnessing a bit of a follow up on the lower side in this particular counter. As far as levels are concerned, from a trading perspective, 420, that's yesterday's low, is very strong support for this particular counter. If bought it, and if somebody wants to buy at current level, keep a stick stop loss at 420, purely just to play a pullback move. Now, coming to positional view in this particular stock, we have seen a very good momentum in this particular counter over the past few years. And if somebody wants to buy for next 2 to 3 year kind of time horizon, then buy in multiple tranches. A staggered manner should be the approach buying in this particular counter, because there could be possibility of further correction to continue in this particular stock over the period. So positionally, we still believe that the stock has a potential to test 550, 600 kind of levels. New record high can be seen in next 1 to 2 year time frame. But purely from a trading perspective, keep a stick stop loss at 420.
Okay, fair point. I hope this has also helped all our viewers out there with their the view that Nilesh has shared on this stock. Let me look at the next one. This one is from Gunjan, and she wants to know about two stocks: Ashoka Buildcon or Ashok Leyland. Infra vis-a-vis the auto part, and fresh entry is what she wants to take. So would you take the Ashok Leyland from the auto space at this point in time, or is Ashoka Buildcon looking good on the technical charts?
See, out of these two, I have to pick. Then I would like to go with Ashok Leyland. The counter is looking very strong on the chart. It has almost hit a new record high. In fact, it was shy away from hitting a new record high yesterday. In fact, today. So today we have seen some profit taking at the high levels. See, positionally, Ashok Leyland within Auto Pack is having a very strong structure, and if it breaks about 256 levels on the upside, then the next target would be somewhere around 280 to 300. So Ashok Leyland is something that one can look for. Keep buy in multiple tranches. This particular counter has a potential to test 280 to 300 from short to medium term perspective. And if you are buying at current level, then keep a strict stop loss at 238. And yes, it's a buy. Now coming to Ashoka, see comparatively the structure out here is looking more sort of a sideways, and purely from a trading perspective, I think one can take a contra bet keeping a stop loss below 199. Purely just to play a pullback towards 220 to 235 can be seen on the chart. But positionally, I do not see any clear trend in this particular counter, so it's an avoid.
It's an avoid. Okay. I hope this has helped you out, Gunjan, in identifying how to go about the key stocks you've asked. Let's take a few questions on our WhatsApp. Many of the viewers are joining in there too to send me their questions. We'll take the first question from Naman Diora. He's from Kolkata. Hi, Naman. The question is on ITC from the FMCG space. He says that he has just bought this stock yesterday before the markets closed, and he wants to know both fundamentals as well as technicals for the next 3 to 2 months time frame on ITC.
Right. So ITC is a slow mover. Do not expect any big spurt in this particular counter. We have seen a lot of consolidation in the past couple of months now. If you see since February, the stock is stuck in a very tight range. On the upside, 435 is acting as a very strong resistance. On the lower side, immediate support if you see is placed at 410. So if you have bought it yesterday, then keep a stick stop loss at 410. If you see any pullback towards 425 to 430, use that pullback to exit and book profit because it's a very trading in a very narrow range as of now. From 2 to 3 months perspective, I think the stock has a possibility of testing 435 to 440 levels on the upside as well. So one should look ITC in the from a positional perspective and can be added in the portfolio, but time horizon should be 8 to 12 months plus kind of time horizon. And from a trading perspective, as I mentioned, 410 to 435 is the range for this particular counter.
Okay, fair point. Let's take another one then. This question is from one of our viewers again on our WhatsApp. We will take. This is from Teja from Nillore. Teja wants to know that on Nalco, sir, what is the view that you have? If I have a 10-year time frame, can I actually go on to invest 5 lakh rupees in Nalco? That's the question that's coming in. So, a time horizon as large as 10 years and a quantum of 5 lakh rupees to be invested in one stock. Would you advise that, and that too on Nalco?
See, first of all, if you see this counter 10 years back from here, so in the year 2015, it was trading somewhere around 20 rupees. So we have already seen multi-bagger kind of return in this particular stock. So yes, there is possibility of counter to deliver 20-25% kind of CAGR in this particular counter over the period. So at present, the stock is moving more sort of a sideways. Now we have seen a lot of selling pressure in the metal space amid tariff war that is going on. So keeping that in mind, from a short-term perspective, I believe the stock may test lower levels of 160 or 150 as well. So you may get a lower level, lower entry price in this particular counter. So buy in multiple tranches. 5 lakh rupees can be divided into 5 equal tranches. And yes, it can be added in the portfolio from a longer term perspective. 8 to 10 years is a very big time frame. The stock has a potential to deliver 20 to 25% as I mentioned. But keep a strict stop loss if you are buying in multiple tranches. That 120 is the very strong support. So keep that in mind. And yes, it can be added in the portfolio for a long term time frame.
Okay, fair point. I hope this has also helped you out in getting a clarity as to how to go about it. Taking the next one. This one is from one of our viewers on our YouTube again. This is Amir Ali. He says, Hi Sakshi. Hi Amir, how are you? The question is on NHPC. That's from the power space. The question is that I have 1000 shares. The price at which I bought it is 96. Can you please advise whether I can continue to hold or should I exit? The stock has come down from your buying level. It's currently trading at 88. Nilesh, what would you advise?
See, I think he must have bought it long time back because 95, 96 levels was last seen in the year 2024, approximate 1 year back, I would say. So we have already seen a good time-wise correction in this particular counter. At present, the stock is making an attempt to witness a positive move. So yesterday, in fact, day before yesterday, we have seen a big spurt all the way from 85 to 88. So there could be a possibility of a follow-up move towards 95 to 100 from a short-term perspective. As of now, one should keep a stop loss at 84. So that's 4 rupees lower from current market price. The stock has a potential to test 95 to 100 in next 2 to 3 months.
Okay, fair point. I hope this has also helped you out in getting a clear view. Taking the next one, then. This one is from one of our viewers, Satyan. He says, I have many banking and NBFC stocks in my portfolio, but some of them have underperformed. I want to know whether I could continue to hold on to them or should I exit. The first one is Karnataka Bank. Priced the price at which he bought it is 200 levels, and the second one is IDFC First, which he bought it at 68, and he wants to know what should be the strategy on both these banks now.
See, out of these two, KTK Bank is looking weak on the chart. So here my advice would be if you see any pullback towards 195 to 200, even if your price comes back, use this pullback to exit from the long position in KTK Bank. Structure is looking more sort of a sideways to weak. We may see this consolidation with negative bias to continue. Now, on the other hand, IDFC First Bank, see, we have also seen a lot of underperformance in this particular counter as well. All the it has fallen all the way from almost 100 in the year 2023 to 50 rupees last year. So overall, we have seen more than 50% correction in this particular counter. But good part is that from the lower levels, the stock has started moving higher. So you can stay put since your entry point is quite a lower price at 68 rupees. So keep a stop loss at 74 as of now and ride this momentum. I believe that the stock has a potential to test 82, 85, or maybe 90 from a short to medium term perspective.
Okay, fair point. I hope this has answered your question well. Taking the next one, then. This one is from one of our viewers, Ratna Prabha. Ratna Prabha wants to know about Lupin. She holds about 23 shares. The average price is 2,110. And the question is that I have been holding it since 1 year. I want to know whether I should average some more stocks at the current level. The pharma stocks overall, a view if you could share, Nilesh, from your end, and a view on Lupin also.
Right. So first of all, we have seen announcement from the Trump over 200 percentage tariff can be levied on pharmaceutical space. So that's a kind of a negative sentiment we have as of now on pharmaceutical space. As far as Nifty Pharma Index is concerned, we have seen a good momentum. This particular index is trading well above all long-term and short-term moving averages. So there could be possibility of a gradual up move to continue. In between, we may see some selling pressure amid negative news on the global front. But overall, the undertone is on a positive side from a positional perspective. From next 1 to 2 year point of view, I think the pharma stocks, specifically large cap counters like Sun Pharma, Glenmark, Divi's, these are the stocks that can be added in the portfolio. Now, coming to Lupin, see this particular stock, in fact, comparatively it has underperformed and the structure is also not looking that promising. I would advise to better shift your position from Lupin to Glenmark or maybe Divi's Lab, Dr. Reddy. You have better options available within this space if you want to remain only in pharma then. Lupin, if you want to continue to hold, then keep a stop loss at 1860. And if you see any pullbacks toward 2000, 2100, use this pullback to exit. If you want to stay put for a longer term time frame, yes, then you can probably stay put. The positional structure is looking positive.
Okay, fair point. I hope this has answered your question well. The next one is from one of our viewer, and this question is from Arun Kumar Gupta. And Arun Kumar Gupta says, is it the right time to enter Tata Technologies and ITC Hotels? What's your view? Tata Tech is something that's been a laggard since the time that it got into a listed space from the IPO, and ITC Hotels is the demerged entity from the hospitality space. How would you look at both these stocks?
See, out of these two, ITC Hotel, although we have a limited data, it's a recent demerger that we have seen in the month of January 2025. But ITC Hotel is looking strong on the chart as well as fundamental. We all know that it is backed by ITC Group. So ITC Hotel is looking strong on the chart, can be added at current level. But since it has surged a lot in past couple of trading session, so better buy in a staggered manner. Stock has a potential to test 260, 300 kind of levels on the upside. So wait for some bit of correction on the back of profit taking. Use that correction as a buying opportunity. Keep a stop loss at 210 and target would be 260 to 280. Coming to Tata Technology, this has been one of the underperformer and still the structure is not looking that promising. If you want to play pullback, then you can buy, keep a stop loss at 670. Pullback may take this counter towards 750 to 800, but we are not expecting any V-shape kind of recovery in this particular counter. So as of now, it's an avoid from a position perspective. From a trading point of view, with a strict stop loss, it can be bought.
Okay, fair point. I hope this has also, helped you out in getting a clear sense as to how to go about it. 12:27. I think it's time to get Nilesh to talk about his own choice of stocks as well. Nilesh, we have been seeing a lot of consolidation play out in the market. Is it making it difficult to really spot the stocks, or do you think there are enough stock opportunities, specific opportunities that investors can look at?
See, Sakshi, as I mentioned, the markets are in a consolidation mode, and we are expecting this consolidation to continue. We have seen a lot of, we are expecting time-wise correction to continue. Now, in this kind of, truncated market, in this kind of a weak market, although it is difficult to find quality stocks which are giving momentum, but yes, there are few opportunities in few selective space like AMC space. If you see HDFC AMC, UTI AMC, in fact, all these stocks have given a good momentum. Now, within this space, one particular stock that is looking very strong on the chart, NAM India. So, NAM India, that is Nippon Life. This particular counter has given a multi-month breakout today and looks strong on the chart from a positional perspective. It has given a good multi-month breakout today. On the upside, we can expect a follow-up move towards 860, 880 or 900. One can keep a stop loss at 770 and NAM India can be added on declines and also can be added at current level as well.
Okay, got that. I hope viewers you've taken that down from Rich's list of stocks, Nilesh's list of stocks there. Thank you so much, Nilesh, for sharing your views on all the stock queries that have come onto your way, patiently answering all the questions from our viewers. Always appreciate your time with us on Business Today Television, so that we can continue to get you back and stay with us. And of course, we hope you have a fantastic weekend upcoming, and we'll see you very soon in another edition.
Thank you, Sakshi.
All right, viewers, now Ruchit Jain is joining in. He's a Vice President and Head of Equity Technical Research Wealth Management at Motilal Oswal Financial Services, and he's with us to take up the rest of your questions. Ruchit, warm welcome. Good to have you with us. Now, help us understand first your take on the markets. What's your fresh, outlook? It's the expiry session today, and of course, it's been. I was speaking to Nilesh before you, and we were discussing the consolidative nature in the markets right now, and whether it's getting very difficult to form strategies on the index level. Should one stick to just a stock specific strategy? What is your own idea?
Yeah, hi, very good afternoon, Sakshi. Well, certainly it's been, I think, 6 or 7 trading sessions where the index is consolidated within a narrow range. Now, Sakshi, whenever market goes through some kind of corrective phase, there are two types of correction. One is either a price-wise correction, where we see some sharp price corrections, and second is time-wise correction, where the market moves within a narrow range for a certain period of time. So we believe that the kind of consolidation that we have seen over last few trading sessions, this is more of a time-wise corrective phase within an uptrend. The important supports, primarily the 20-day exponential moving average support, which is around 25, 200, 250, has not been breached yet. So this seems more of a time-wise corrective phase, and once this time-wise correction is over, we should then see a resumption of the broader uptrend. So till the supports are intact, we are advising our traders to look more of a buying opportunities on the dips that we are getting, and have some positional view where once the index resumes uptrend, then actually the rewards would start coming in. But for now, if one is looking from a very day perspective or 1 or 2 trading perspective, then it could be a continuation of the consolidation phase that we are seeing. But certainly from a positional perspective, these dips are good buying opportunities.
Fair point. Okay, Ruchit, so many questions coming in, as you've joined in for you to answer all of our queries that are coming in from our viewers. So we'll straight away dive in. The first question coming your way is from one of our viewers, Shantanu Pansi. On YouTube, he says, I have a query on South Indian Bank. 2,000 shares is what I have, bought at 33 levels. Should I wait for a long time before it really starts to move higher, or should I switch?
So if we look at the banks, the stock's performance in last 3 or 4 months, the stock has been gradually forming a high top, high bottom structure, which is a good sign. No, so I would recommend to continue to hold on your positions for now. But no, on the lower side, the support for the stock has now shifted to 28 rupees. So I would even advise to not to have a view that you would not exit the positions at all for a longer period of time. But in case if the stock breaks 28 rupees from current levels, then exit and keep a stop loss below 28 rupees for now. And as the stock moves higher, gradually you can keep revising your stop loss on the higher side. But for now, I would advise to hold on your positions with stop loss below 28.
Okay, fair point. I hope this has answered your question. Taking the next one, this one is from Surinder Gaur Ghuman. He's writing in on Carousel Limited, the stock that he has bought at 840 odd levels. Let's quickly look at the stock right now, Carousel in Limited, and I think it's trading around the same price only. I think 853 is the current level at which it's trading at. The question is that I have 175 shares. I want to know whether I should sell or hold this stock in my portfolio. Okay, we'll definitely get you. I think there is about a 10-15 rupee per share kind of a benefit that you have on the stock right now. Ruchit, do you track this one at all, Carousel shares?
No, Sakshi, unfortunately, I have not tracked so far, so I won't be able to give any view on this.
Okay, unfortunately, we'll try to take this up with another guest of ours, Surinder. Hold that thought and maybe come tomorrow again with another guest who could be taking this stock query for you. This one is from Abhishek Das. Now, he wants to know about Inox Wind. He has this stock in his portfolio at 167 levels and he wants to know, should I add more in the coming days? I'm actually looking for a long-term perspective. We've also seen today, I think, JM Financial come out with a report saying that they actually believe this entire space could see strong Q1, and they have also, seen some higher target prices on this one. Inox Wind particularly for you.
Because looking from a longer term perspective, I think
Yeah.
continue to hold your existing positions. And if you want to add more, you can even add more at current levels. But certainly not a stock where you should expect very short term momentum. But the stock has formed a very strong base around the recent lows of 135 to 140. And since that, no, we have seen that whenever there are price correction, the prices are forming a higher top, higher bottom structure, with recent higher bottom being formed in the range of 165 to 160. So the price-wise downside seems to be very limited, not from a momentum perspective, but no, from a longer-term perspective, you can look to add fresh positions to at current levels.
Okay. Next, actually, let's look at Bhaskar's question. Bhaskar says, I want to know about Avantel. The question is that I have this stock at the level of 135. What's the view that you would have right now? The current stock price is somewhere around 156, 160, 157 odd levels. And the question is, what exactly should be the future? This company is into the telecom equipment and accessories sector. About 4,000 odd crore rupee of a market cap is what it has. A 52-week high of 209 and a 52-week low of 90. So it's somewhere in the middle right now at 156 odd levels. What would you say?
So there are some signs of profit booking off late in the stock where the RSI has shown a negative crossover from the overbought zone. So we could see some short-term dip in the stock, but the stock has very strong support around the 148 levels where the 40-day mark for the stock is placed. So I would recommend that from a positional perspective, since you are holding in good profits, then you can put partial profits over here, and on the rest of the positions, on your other partial positions, you can keep a stop loss somewhere below 148.
Okay. Ankur writes in, he says, Sakshi and the entire team of Business Today Television, happy Guru Purnima. This is a lovely show, and I want to say that all our market guests are like our market gurus and helping us understand about markets and the strategies. Thank you so much for such wonderful wishes, Ankur. Wish you the same as well. And yes, with the help of, top market experts like Ruchit, we just strive to help you out all so that you are in the right course when it comes to the markets. So thanks to you, Ruchit. A lot of appreciation coming in from our viewers for you, so that you can take out time and really help them out, identify whether they are making a mistake in the stock selection or they're doing anything wrong, how can they prevent their losses, and what is the right course that they take. So truly appreciate all the market guests who join in on daily calls as well. Let's take the next question. This one is from one of our viewers again. This is We'll try to take one from Arihant Pant. He wants to know about Aditya Birla Capital. This stock he has at the rate of 275. He says, I actually can hold, but I want to know whether I can actually average also this stock at the current levels. Aditya Birla Capital for you. Currently it's at 272. He bought it at 275, so slightly lesser than his own price of buying.
Yeah, firstly, Sakshi, thank you, for the wonderful words, and thank you to all the viewers as well. I think Aditya Birla Capital, the overall trend remains strong, and we have seen that post the IPO. Recently the stock has given a breakout of the post IPO level. So I think the momentum also remains positive. But since your buying price is around current market price only, I would recommend to hold on existing portions, whatever you have bought, and keep a buy on dip approach. That in case if we get any kind of dip in the near future to in the range of 260 to 250, ideally those would be the levels where again support would coming on declines. So hold your existing positions, and for averaging, keep a buy and dip approach. In case the stock comes around this mentioned support zone, then take that as a buying opportunity to add your more to your portfolio.
Okay, fair point. Let's take some more questions. Some are coming in on our WhatsApp. Let's take some of those questions as well. Okay, Mohit from Ludhiana says, good morning. I have got 2,000 shares of Trident. My level was 3 rupees 90 paisa. My time horizon still is about 2 years on the stock. Trident has moved up quite a lot from the time that you really bought the stock at, when it was absolutely a penny stock. It's right now at 32 odd levels as well. So indeed, you have made a lot of money. Thanks, congratulations to you for making the selection at about 4 odd levels, and you've really made a considerable amount of money. Let's find out from Ruchit whether it makes sense to continue to hold on, or actually should you save your profits that you made. Your suggestion, Ruchit.
So this seems to be a very long-term position, because I think last time 3 or 4 rupees were somewhere in 2020 around the COVID times. But since then, yes, the stock did well till 2022, where we even saw at levels around 60, 65, and then the stock has gone through a decent corrective phase over last couple of years. But these are not the prices where you should look to exit if you have so much patience, because the stock has already formed a good support base in the range around 25 or 24, 25, and we could see a gradual up move going ahead. We can also see that the segment as a whole, in recent past, the entire textile segment as a whole has also seen a good buying interest. So would recommend to hold on your existing positions. 28 should be seen as the immediate support for the stock. Till that is intact, better to hold on existing long positions.
Okay, let's take another one. This one is from Aman Saraf. He says, hi, I want to know whether I can look at defense stocks like Bharat Dynamics and even GRSC at the current levels to take a fresh entry if I have a 2 to 3 year time horizon. Last 2 months, we've actually seen substantial moves on the defense stocks, Ruchit. Do you still feel there is some more upside, and can one still enter a BDL or a GRSC?
The move that has started recently since the month of April and May, post that India-Pakistan short war that we had seen. I think this is a structural uptrend which has started, and that should last for next 2 to 3 years. But be very selective in the stocks, because since the stocks have seen a good run up already in the last 3 months, there would be in between phases of consolidation or corrections in such stocks. But yes, if you are looking for the next 2 3 years perspective, my preferred picks would be more, BL Bharat Electronics, where the structure remains very strong. Even in during corrective phase, the stock is showing a good relative outperformance compared to other names within the sector. So yes, on a sector we have a positive view from next 2 to 3 years perspective. But BL would be the preferred pick which you can look to add at current levels.
Fair point. Let's take another one then. This one is from one of our viewers. This is, okay, we have one of our questions coming in from Vicky Pandit from Gurugram. He says, I have a question on Equita Small Finance Bank, which I bought at 92. Should I hold or sell? What would your advice be?
So, after a long period of relative underperformance in the stock, we have not seen any kind of trended up move, coming in the stock. Any pullback moves toward its 200-day exponential moving average are getting sold into. I think it's better to look for some names from the NBFC stocks. We can see that the NBFC space has shown a good relative outperformance compared to many of these small finance banks. So at current levels, the structure does not look that positive that it would show any outperformance within the sector. So I would suggest taking an exit from this stock, and maybe you can look to shift to some better banking or NBFC names.
Okay, can you suggest a better NBFC or a banking name that you would be tracking?
So within the NBFC space, Shriram Finance is looking quite positive from a bit midterm perspective. So I think one is Shriram Finance, which you can look at from the NBFCs, and if one is looking more from a large cap banking space, then Kotak Bank and SBI. These are two names where the positional view is quite bullish. So you can consider shifting to large cap names. Do not look at the share price. The Equita Small Finance is trading around 60 65, but other stocks are expensive. I think Sakshi, we had discussed in some of the show earlier as well
Yeah.
that rather than looking at the share price, you should look at what the trend for the stock is, and maybe you would get lesser number of stocks, but the probability of making profits there is higher than what you can make in low price stocks.
Yeah, sometimes you just have to make that shift in your understanding and your approach to the markets, and then probably you just will be able to see for yourself what works best. Let's look at the next one. This is Jinal Shah from Ahmedabad. Jinal says, I want to understand about NTPC Green. Short term view is what I have. Next 1 to 3 months perspective. You did talk about Inox Wind, another another stock from the same space, the renewable energy basket, NTPC Green. 108 is the current level. What would you say?
So if you look at the recent past, then the stock is traded within a broader range of 118 to 105. It says that the stock is trading around the lower end of this range, then so we could see a pullback move again towards 115, 118 kind of levels. But the trend is more sideways rather than bullish or bearish. So expect some consolidation to continue. Only when the stock gives a breakout above this 118, 120 range, then only we should expect any kind of trended up moves. Otherwise, the consolidation could continue for a while.
Okay, let's take another question. This one is from Hari Prasad. He says, I'm a retired professor from Nellore in Andhra Pradesh. Hi, Mr. Prasad. Warm welcome to you. Happy Guru Purnima. The question is on Natco Pharma. He has 100 shares at the rate of 1005, and he wants to know what could be the trend that he should be looking at in the near to medium term perspective for Natco Pharma.
Relatively, if you look at within the pharma space, the stock has not that done that well. In fact, on some of the negative news in the month of February 25, we even witnessed a big gap down opening which is not filled yet. So I think the stock would continue to show some relative underperformance to some of the other stocks within the pharma names. If you look at the recent pharma trends, also the CDMO stocks within the entire pharma baskets
Yeah.
have been doing quite well. Stocks such as DP's Lab is there, Laura's Lab is there. That's where the momentum is there on the positive side. So if you're looking from a bit short-term perspective, Netco Pharma does not seem that it would show any significant outperformance. So you can decide to either make a switch to any of the CDMO names which we discussed.
Okay, taking the next one. This one is from one of our viewers on our YouTube. Ankur says, Ruchit sir, can you please tell me if Imagica World or Sagility, either of these can become a multi-bagger from current levels?
So Imagica still does not seem to be a multi-bagger stock, at least for now, because we have already seen a good run-up move earlier, and now post that entire the correction which was there, we had no seen a volume-based correction, and the stock in last 3 or 4 months when the entire market have seen an up move, we have not seen any kind of trended up moves coming in the stock. You can look for agility because the stock has formed a good support base around 38 levels. Until that 38 levels is intact, the price wise downside would be very limited from here on. So you can buy agility over here, but keep a strict stop loss below 38 levels. If that levels gets breached, then you should take an exit too. So with the stop loss below 38, you can look to buy agility in there.
Okay, got that. Let's take the next one. This one is from Kathi Riswaran, who's writing in from our YouTube channel. Welcome to the show. The question is on BCL Industries and wants to know an outlook on this stock. The stock is currently trading at around 41.6 odd levels. It operates in the oil, distillery, real estate sectors as well. Let's find out whether this stock has enough potential. In the last 1 month, it's been flat with a negative bias. Similarly, in the last 1 year, the stock has lost about 19 odd percent. But in the last 3 years, it's gone up about 10 odd percent. Your suggestion on BCL Industries, Ruchit?
So the stock has been an underperformer. No, I think in 2024, at the start of 2024, the stock had made a top around 85 kind of levels, and since then we have seen a gradual correction in the stock. Even in last even last 7-8 months, if you see when the markets corrected, no, since the month of October, no, we have seen a good recovery in the broader market since last 3 months, but the stock is not yet able to surpass even the 200 DMA, which is around 45 rupees. So as of now, the structures are not positive, so you can avoid the stock. Only if it surpasses that 45 resistance with good volumes, then you can take a review in the stock.
All right, okay, let's take another one. This one is from one of our viewers, Dhruv Tyagi. He says 100 shares is what I have of DLF from the real estate space. The price at what he bought DLF is at 856. What to do in these counters is what his question is. How would you advise?
So hold on to your existing positions. No, real estate as a space, I think, should do well, and at least your selective stock should do well going ahead. Because what we've seen in last 2 or 3 months, since there has been the buzz of RBI rate cuts, the certain interest-sensitive stocks such as realty have witnessed a good price volume action, and that I think going ahead could continue for a while. There could be in between times of consolidations or smaller corrections, but the broader trend remains positive for DLF. The immediate support for the stock is around 810, 815 kind of range, and no long-term support is somewhere around 770. So till these levels are intact, I would suggest to continue to hold on your existing positions.
Okay, we'll take just last one question and then we'll go on to Ruchit's own choice of stocks. Ravi Mishra from Delhi writes in says, Namaste Sakshi, Namaste आपको भी रवि जी. इनके पास रतन इंडिया पावर के शेयर हैं, कुछ 8,000 शेयर्स लिए हुए हैं 16.5 के भाव पर. यहाँ पर शॉर्ट टर्म में क्या व्यू है, ये आपसे जानना चाहते हैं. एक टाइम आया था रुचित जब सब लोग रतन इंडिया के सभी शेयर्स के ऊपर फोकस कर रहे थे, रतन इंडिया एंटरप्राइजेज, रतन इंडिया पावर, इन सभी में काफ़ी बड़ी बड़ी पोजीशंस आ रही थी, खबरें ऐसे आ रही थी कि ये मल्टी बैगर स्टॉक हो जाएगा और इसलिए काफ़ी रिटेल निवेशकों ने यहाँ पर पोजीशंस ली. लेकिन उसके बाद काफ़ी लंबे अरसे से यहाँ पर कोई मूवमेंट नहीं है, किसी तरीके का हमने एक्शन नहीं देखा है. इनफैक्ट ये स्टॉक्स काफ़ी नीचे गए थे, वहाँ से थोड़ी रिकवरी आई है, अब 16 के ऊपर वापस से आ रहे हैं. इनकी भी बाइंग 16.5 के भाव पर है, 16.3 पर आ चुका है, आज 3% ऊपर है. यहाँ पर अभी शॉर्ट टर्म के लिए आपका क्या नज़रिया है?
यही रेजिस्टेंस है 17 के आसपास, क्योंकि अगर हम मानो थोड़ा हिस्टोरिकल डेटा देखें लास्ट 6-7 महीने में, दिसंबर महीने में स्टॉक ने 17 रुपए का हाई बनाया था, जहां से आई थिंक 9 रुपए के आसपास तक का करेक्शन आया था. तो पिछली बार भी जब 17 के आसपास आया था तो बड़ी सेलिंग आई थी, और अभी भी ये 17 के रेजिस्टेंस के आसपास आया है. बट अच्छी चीज ये है कि अगर लास्ट 15-20 दिनों में देखें तो स्टॉक में वॉल्यूम्स काफी अच्छे हुए हैं. सो वेदर ये ब्रेकआउट देता है कि नहीं, ये काफी क्रूशियल रहेगा आने वाले दिनों में. सो मैं कहूंगा कि फिलहाल आप ये अपनी पोजीशन को होल्ड करें, और लेकिन वापस हफ्ते भर में रिव्यू भी करे कि वेदर स्टॉक के स्ट्रक्चर कुछ चेंज हो रहे हैं कि नहीं. 17 के ऊपर अगर स्टॉक का ब्रेकआउट देता है तो आप फिर एक अच्छा डायरेक्शनल मूव एक्सपेक्ट कर सकते हैं. और हाल फिलहाल के लिए जो इमीडिएट सपोर्ट है वो 14.50 के आसपास है, जो इसका 20 दिन का एक्सपोनेंशियल मूविंग एवरेज है. तो 14 रुपए के नीचे आप के आसपास आप अपने स्टॉप लॉसेस प्लेस करें और वेट करें. बट यस नेक्स्ट 1 और वीक में आप एक बार रिव्यू स्टॉक के ऊपर वापस जरूर लें.
ठीक है, एक हफ्ते के अंदर आपको दोबारा से व्यू लेना है और 14.5 का आपको स्टॉप लॉस बताया गया है. 17 के ऊपर अगर ब्रेकआउट आता है, सस्टेन करता है, तब एक बार फिर से आपका व्यू बनेगा. यहाँ पर 90 पॉइंट्स का भी डिक्लाइन है मार्केट्स में. 25,385 के लेवल्स पर अभी निफ्टी चल रहा है. रुचित जी, अब बात करते हैं आपके पसंदीदा शेयर्स के ऊपर. कहाँ पर आपकी नजर है अभी?
तो हम ऐसे स्टॉक ही रेकमेंड कर रहे हैं कि जो ऐसे कंसोलिडेशन फेज में भी आउट परफॉर्म कर रहे हैं, जिनमें ब्रेकआउट्स आ रहा है या अपने 52 वीक हाइज के आसपास ट्रेड कर रहे हैं. जिनमें से दो नाम है, एक है अल्ट्राटेक सीमेंट, जहां पे हम लग रहा है कि देख रहे हैं कि पिछले 1 साल से ये स्टॉक एक कंसोलिडेशन फेज में फंसा हुआ था, और वो कंसोलिडेशन के ब्रेकआउट पिछले हफ्ते हमने देखे हैं. 4-5 ट्रेडिंग सेशन में जहाँ पे मार्केट ने अच्छा नहीं किया है, ये स्टॉक में ग्रेजुअल बाइंग हमें क्लियरली नजर आ रही है. तो 12,200 के नीचे स्टॉप लॉस रखे अल्ट्राटेक सीमेंट में 13,100, 13,200 की रेंज के टारगेट के लिए खरीदारी की जा सकती है. और सेकंड है निपॉन एएमसी के, जहाँ पे एएमसी एज अ सेक्टर आज काफी अच्छा है कल के डेटा के बाद में. और निपॉन एएमसी में भी कुछ ऐसे ही 4 सेक्टर्स है जहाँ पे पिछले कुछ दिनों में कंसोलिडेट हुआ, 20 डे स्टॉक के लिए सपोर्ट एक्ट हुए हैं. तो 770 का काफी इंपॉर्टेंट सपोर्ट फिलहाल है स्टॉक के लिए, और ये अगर इंटैक्ट रहता है तो आप 860 तक के, 860, 880 तक की रेंज के लेवल्स एक्सपेक्ट कर सकते हैं. तो निपॉन इंडिया है जहाँ पे 770 के नीचे स्टॉप लॉस रख के खरीदारी कर सकते हैं.
ओके गॉट दैट। चलिए यहाँ पर भी आपको राय मिल चुकी है। रुचित जी, इसी के साथ बहुत बहुत शुक्रिया हमारे साथ आज के इस खास शो पर बने रहने के लिए और तमाम क्वेरीज हमारे सभी दर्शकों की एड्रेस करने के लिए। ऑलवेज अ प्लेजर टू हैव यू विद अस ऑन डेली कॉल्स। थैंक यू सो मच फॉर योर टाइम।
Thank you, Sakshi.
25,392 viewers at the Nifty is at 84 points lower. Choppy day again. It's panning out to be last 2.5 hours remaining for the markets to shut shop. Remember, it's a weekly options expiry, so we'll see how it really pans out from here on. But do stay tuned in case you are looking forward to as to how the market momentum is continuing. We'll get you all the coverage there, and of course we will also be getting you the closing edition at 3 p.m. that I'll be back with, so stay tuned for that too. Thanks a lot.